As expected, Joe Biden failed to urge Saudi Arabia to significantly boost its oil production. Thus, the risk of energy shortages the world is expected to face this autumn remains extremely high. Against this background, oil has resumed its rally and has already reached the mark of $105 per barrel. Oddly enough, the only thing that is currently holding back crude prices is the Western countries' intention to impose a price ceiling for Russian energy. Obviously, oil will continue to gain value, but this measure could reinforce an uptrend. While the situation is uncertain, investors are in no hurry to take risks, fearing sharp price fluctuations that could throw the market off balance. According to the trading chart, Brent crude oil futures are in a correction phase, a rebound from $97.50 and $100 per barrel. The area of interaction between trading forces has allowed the asset to rise above the local low of its downside momentum and at about 9%. If the quote extends gains, it may well return to the area of $107.50 as a part of a correction. Gold also edged up, but failed to reach the level of $1,700 per troy ounce. However, this is nothing but a local rebound. The outlook for the yellow metal is still gloomy. Moreover, on Thursday, the European Central Bank is set to raise interest rates for the first time in many years. Thus, the current upward move is just a signal for a subsequent decline towards $1,600 per troy ounce. The downtrend will continue if the quote fixes below the key level of 1,700, at least on the 4-hour chart. In the meantime, there is a likelihood that the rebound may turn into a local correction. Speaking of the ruble, it became clear that on Friday the Bank of Russia would lower its key interest rate to 9% from 9.5%. Given the current situation and business needs, this rate cut is not enough. Such a slow pace of a monetary policy easing is more likely to cause major harm to the economy. Investments in the economy's real sector will remain subdued. The only thing that may attract investors in such a situation is government bonds, the yield on which is still quite high. So, it came as no surprise that the Russian currency fell below 58 rubles per dollar and even hit the mark of 54 rubles. Of course, the regulator's decision to cut the key interest rate will weaken the ruble somewhat, but only for a while. Later on, the ruble is expected to resume its bullish run. As long as the Bank of Russia continues to pursue a moderately tight monetary policy, the situation will hardly change. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.